Hello everyone, I've got some amazing updates to share with you. As always, I'm here to give you the full picture, both the highs and the lows. Let's start with some exciting news. NIO second-hand car prices here in China have been skyrocketing recently. I've been noticing a significant increase in the number of NIO vehicles on the streets. It's like every other car I see is a NIO, every time we spot one on the road. This trend is also evident at the vehicle registration offices, where the presence of NIO cars is increasingly common. So, what's driving this surge in second-hand NIO prices? The demand for NIO cars has reached such heights that many second-hand dealers, who traditionally dealt only in gasoline vehicles, have started accepting electric vehicles, especially NIO. Earlier, only a few specialized dealers handled electric vehicles. But now, due to the declining profitability of gasoline cars, these dealers have begun to diversify into the electric vehicle market. They've observed how much profit their counterparts dealing in second-hand NIOs are making and want a piece of the action. As a result, the competition for NIO vehicles in the second-hand market has intensified, making it increasingly difficult to find one. This high demand has naturally driven up prices significantly. For example, the price of a second-hand NIO ET5, which used to be around 180k RMB, has now increased to 190k RMB, despite the fact that a brand new ET5 costs around 300k RMB or a bit less, around 220k to 230k RMB, if you opt for the BaaS battery as a service option, where you rent the battery instead of buying it. With second-hand NIO in such short supply, these prices are expected to rise even further. The rising prices of second-hand NIO are a positive sign for consumer confidence. People feel more secure in their decision to buy, knowing that they won't lose much value if they decide to sell later. It's a clear indication of the strong demand for these vehicles. Inventory cars, in particular, are always in high demand. These are cars that NIO has in stock and can deliver immediately, and they're incredibly popular. Every NIO sales rep I know has a list of 20 to 30 customers constantly inquiring about these inventory cars. The reps are so busy that they have to keep refreshing their NIO business apps to see if any new inventory cars have become available. And when one does pop up, it's gone within minutes. They have to quickly call their customers to see if they're interested, because if they don't act fast, someone else will snatch it up. It's pretty intense. This situation really highlights how price-sensitive NIO customers are, especially when it comes to inventory cars, which can be a bit cheaper than ordering a new one. A lot of the success NIO is seeing right now can be attributed to the resurgence of the BaaS policy. Before the adjustments in March, only about 10% of customers opted for BaaS, with the majority choosing to buy the battery outright. But after the policy changes, the tables have turned now. Around 80 to 90% of customers are choosing BaaS, recognizing the value it offers. This shift has been a major win for NIO, and it's clear that people are starting to appreciate the benefits of battery swapping. However, there's still room for growth. Most of NIO sales are concentrated around the Shanghai area and the Yangtze River Delta region. To sustain and expand their success, NIO needs to increase its marketing efforts in other parts of China. There's a lot of untapped potential out there, and with the right strategies, NIO could see significant growth in those regions. But let's talk about the stock price for a moment. It's currently sitting at around $3.67, close to its 52-week low. That's not exactly encouraging, but it's important to remember that what really matters is the number of vehicles NIO is delivering and the revenue that's coming in. The market is currently pricing in the possibility of further dilution due to NIO high cash burn rate, despite record deliveries in Q2. We're likely to see strong delivery numbers in Q3 as well, with August expected to be a particularly strong month in China. I wouldn't be surprised if NIO consistently maintains deliveries above 20,000 units. The downside, though, is that these high delivery numbers are being driven by extensive incentives, such as free battery swaps and other giveaways, which are significantly impacting NIO's margins. When you combine this with their high R&D spending, capital expenditures, and the ongoing ramp-up of ONVO stores, it's clear that NIO is burning through a lot of cash. They're also hiring a lot of sales reps for ONVO, even though they haven't started delivering cars yet, which means they're paying salaries without generating corresponding revenue. This is why investors are expecting more dilution and why the stock price might continue to face downward pressure. But as long as NIO keeps generating substantial revenue, they'll be able to find funding when needed. Let's not forget that NIO has been in tough spots before, like back in 2018 and 2019. Today, they're in a much better position, but if push comes to shove, I'm confident that NIO CEO could secure additional funds through convertible notes, just like they did in the past. This type of financing is a win-win for investors, who either get their money back or convert the notes into stock at a profit if the share price goes up. So, while NIO revenue is growing, so are their losses. But that's not the end of the world. Many companies operate at a loss for years before becoming profitable. NIO is still in its growth phase, and expecting them to turn a profit right now, when they're only 8 or 9 years old, is unrealistic. Once they reach 50K deliveries per month or more, that's when we can start talking about profitability. I've always believed that NIO could eventually hit $650 per share in the long term, say, 10 years from now. With their advancements in chip technology, software development, and the creation of an automotive ecosystem akin to Android for cars, they're setting themselves up to be a major player in the future, possibly even reaching a $1 trillion market cap. In the short term, however, NIO stock might continue to decline, which could actually be a great buying opportunity for long-term investors. NIO second-hand car prices are soaring in China, driven by surging demand. Even dealers who traditionally focused on gasoline vehicles are now selling NIO cars, leading to intense competition and higher prices. For instance, the price of a second-hand NIO ET5 has risen from 180K to 190K RMB, reflecting strong consumer confidence. Inventory cars are especially sought after, often selling within minutes. The success of NIO Battery as a service BaaS policy has further fueled this demand, with 80–90% of customers now opting for it. Despite record deliveries, NIO stock price is under pressure due to high cash burn, R&D spending, and concerns over potential dilution. However, NIO long-term growth prospects remain promising, presenting potential buying opportunities for investors. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.